Hello there, friends. Frank Zorrilla, Zor Capital, the 15th of January. We're off today, so happy Martin Luther King Day. What we're going to do today, very simply, we're going to do a little weekly recap on some of the weekly charts that we've spoken about on Twitter. So, just go over them really quick. Number one, Amgen, which we spoke about. The stock has been trading sideways for roughly 2.5 years between, call it $140 and $180 a share. As you can see here, over the last year or so, we got a pattern of higher lows. Here's a low, here's a higher low, here's a higher low. And all that means very simply here, the buyers and sellers found equilibrium. And here finally, either the sellers are pretty much done selling a bulk of the stock, or the buyers are more than likely getting a little more antsy as far as buying the stock. So here, we're long the stock of 178. Like I mentioned last week, that more than likely the stock broke above 181. I was going to buy some more, which I did. The stock looks real good, with a stop right over here at 173.76. And again, weekly charts, they're great, number one, for the working guy who doesn't have time to look at intraday or daily charts, okay, which is great for them. You can look at these charts on a weekly basis. Each candle represents 1 week. So if you don't have time to do the daily grind and do the daily charts, I will recommend weekly charts. For the swing trader that does have the time, your full-time swing trader, weekly charts are great, because weekly charts give you the ability to try to hold on to something a little bit longer than the usual, few days to a few weeks. And, the way I look at it is very simply, if you have, if you own a bakery, you're selling muffins and you're selling coffees every single day, the weekly charts, what that is that one wedding cake order that you get every now and then when you make the big money. So weekly charts is a great complement for swing traders, and it's a great way to be involved in the market for that, the working guy, the guy who doesn't have time to look at the daily charts. So this is looking real good. I like the stock. NTR, formerly known as Potash, we had the stock right over here going through 50. They changed the name. They did like a 1-for-3 reverse stock split. This still looks okay. Sideways for a long time. As you can see here, the red and yellow line, 10 and 20 week moving averages, resistance for a long time. They're finally acting as support. This is a character change. I like the stock a lot. We sold some here into this up move. I would like to get involved again if it falls back a little bit more. Steel Dynamics, sideways for a year. Broke out of this box here, long at 39.44, sold some on the way up. Stop loss, original stop loss is roughly 36. The low here, which is 35.80, call it 35.40. What you might want to do is very simply is when you buy these stocks, you take the purchase price 39.44 minus your stop, call it 35.40. That's roughly 4 points. 4 points plus your purchase price. That's your first initial target. Some people might suggest taking off the risk once it gets to that target, and then raising your stop to break even and holding on for the rest until you get stopped out or you start raising accordingly. In this situation, if you got involved at 39.44, it already hit one-time risk. So now you're just waiting for it to set up again so you can raise your stop. WPM looks okay. Slow mover, long at 21.38. It's not doing much. Stop loss goes right over here in 1980. SunCoke Energy already hit one-time risk, long at 11.61. Had a nice move this week and it still looks okay. PRGO looks real good. Very similar to NTR, where the 10 and 20 week moving averages were acting as resistance for a very long time, and now they're acting as support. I'm long the stock at 88.94 thereabouts, and it still looks good. It looks like it has a lot of room to go. So I'm excited about PRGO. Last week we mentioned Weight Watchers, going through this high, roughly 48.34. On Monday, it just took off. So unless you were really quick, you probably missed this one. But this was a great looking chart. JSO, it triggered, not doing much. I bought this as far as looking at the daily chart, and I got stopped out. But on the weekly chart, this thing, it looks okay as long as it stays above 720. And OTEX, sideways for 11 months. It looks okay. If you want to wait for the actual confirmation, then the buy stop here would be 35.07 plus 10 cents, 35.17. So that's still a long ways to go, but it's developing, okay? This stock has been trading in the box between 35 and call it 31.50 for 11 months. So it's developing, it's heavily shorted, but we got to get above this the top of the box here. As far as this week is concerned, Insmed, very good looking chart. This is a high tie flag. Stock double has been trading sideways for roughly 4.5 months. Broke out here last week, had a shakeout, but now it's back above. I like this one a lot. Buy stop 32.17, stop at $29 a share. So again, the weekly chart is a great compliment for the swing trader. So just so that way he can take his small profits, whatever they may be, 10, 15% on a weekly basis when that comes around, but also have the opportunity to play for a longer trend just by looking at the weekly charts and focusing on stocks that have been trading sideways for a long time. The key here is to find stocks that have been trading sideways for a long time, 3, 6 months, a year and a half, because usually the bigger the base, the bigger the sideways action, the bigger the expansion, the bigger the contraction, the bigger the expansion. That's exactly what we're looking for. So either way, trading well and be well.